Hello everybody and welcome to another amazing video of DIY investing. For today's video, we are going to be mapping out the recent breakout that Bitcoin has had. As we've broken out the range highs, now we're setting up for a much bigger move that I believe is going to be hitting my target of 27K. We're going to be talking about how to prepare for what is coming, if and when we see the correction at my target, where's the market going to be going from there, and then we're also going to be talking about what happens if we actually overextend past 27,000 and make a much larger move, even upwards of 30K. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, now here we are to start off today's video. We're going to be talking about the short-term time frames of Bitcoin and analyzing what the recent breakout means. Are we going to be topping at this level, or are we going to end up seeing my target hit at around 27,000? Now, I'm going to draw a line where 27K is so it's easy to understand. Now, 27K was the area that I was targeting ever since we were consolidating inside of this way. And then once we got our bottom of our correction, I talked about why I believe that this was the low point that we were going to see, and why after this is most likely where we're going to finally get that run upwards of 27K. Now we already know based off the Elliott wave structure that we finished wave 1, we finished wave 3, we finished wave 4, which was this sell-off here, and we're inside of this final impulse before we complete our first Elliott wave cycle. Now this is important, guys, because of one of two things. Now, number one, the fact that we're inside of this wave 5 means that this is the very ending of this cycle. Now, I'm not meaning the entire bull cycle, obviously. I just mean the short term of this impulse as we've bottomed after the FTX collapse and as we have started the new bull trend. Now, there's still a lot of people that are thinking that this is a bear market rally, and I could not disagree more because of how clear the impulse is. This is what you're going to see inside of a true bull market. And with us already completing our 4-year cycle, with us breaking out of descending resistance, every single thing that we needed to see for the true beginning of the new bull cycle has already happened, and we have confirmation of that move. Now, we're consolidating right here at the range highs. These are the range highs of August. This is where we were consolidating right before we started collapsing again, and then that led us into even the FTX collapse right here. Now, as it stands, the market does look like we're going to still end up hitting my target at 27K, but I want to talk to you guys about a couple scenarios. Now, scenario one is really where the market ends up topping right here at resistance. Let's assume that my target at 27K never gets hit, and what is going to end up taking place? We're going to analyze a couple targets, and then scenario two is us breaking out of the range highs and hitting my target at 27K. And then scenarios 3 is what happens if we actually overextend past 27K and we rally upwards of this resistance here between $29,000 and about $32,000. Because there's really 3 different scenarios that I see fit. Now, obviously, I'm going to be sticking to my initial plan. I'm personally looking for 27K. Even if we extend higher than that, so be it. You're not always going to nail the exact top. You're not always going to nail the exact bottom. And I think that the majority of what we should be looking to do is capture the bulk of the move. Even if you bought somewhere over here at this high or in between that point and just can accumulate it throughout this period, you might not have nailed the exact bottom of the bear market, and you might have actually bought the range highs before we started that correction back down. But nonetheless, if you bought anywhere at this point and you're selling at anywhere up here, even if it was right here, even if it was right here, or if you're selling at these range highs at this point, you're still capturing the bulk of the move. And I think that that's important. Even if you're buying in here and you're not nailing the exact bottom, and then you're selling somewhere up here at the range highs, and you're not going to end up selling the exact top, let's assume that we rally upwards for one more high, I don't think that it should matter too much. And one of the big things that we oftentimes do inside of our trading plan is we get too caught up trying to nail the exact top or buying that exact bottom that oftentimes we just simply miss out on the entirety of the move. We might have a buy order set, we might be looking at one specific level, Bitcoin corrects, and it just stops right before that level and starts going up. And had you have been too overly optimistic of it hitting that exact target, and you got a little bit too greedy and ahead of yourself, then you simply would have been able to miss out on the entirety of that next impulse. And so the reason I bring this up is because I see a lot of people that are worried about, missing out on one little move. Whereas if you were accumulating down here even if you're selling at these range highs and we continue to go up a little bit higher, it's not something that you should really beat yourself up over. If you made profit on the run up, that's the thing that you should focus on. And I want to talk to you guys about these different scenarios because the thing is we're going to factor all of this in, because right now we're talking about the shorter time frames, right? We're going to factor in the bigger picture as well, because here's the thing. Let's assume that you bought somewhere throughout this period, or maybe you even waited to buy all the way up here as we started to run up inside of this move. And you're somebody that's buying just strictly for the big picture. If that's the case, you shouldn't even be worrying about where we top in this short-term cycle, and you should be focusing much more on 2 to 3 years from now. And we're going to talk about how to factor all of this stuff into your trading plan. Now, first things first, guys, let's talk about the potential where what happens if we don't end up hitting 27K? What happens if we end up topping right here at these range highs and then we start our deeper bearish correction? Well, if that's the case, what we're going to be looking at here is all through Fibonacci. Let's assume that we top at the range highs and this is the top of our wave 5. We don't hit 27K, yet you're somebody that bought down in here and you're actually in profit. If you're somebody that bought down here at the low point, you've made some good gains, and you're worried about us not hitting that final target, the way that I would look at this is simple. I would look at selling 25% of whatever you're in profit in, and then I'd be looking at using that 25% as a way to compound once we actually get a bearish correction, which if that's the case, we'd be looking at something like this. We start the correction back down. Let's assume we get a bounce. But then we would expect to see a deeper move back down to the 618, which is going to be basically 19K and roughly the entirety of this consolidation period that we were sitting at, right? This would be the range support that we were at leading into the FTX collapse. And so that's what we were going to expect if, in fact, we top right here. Now, let's assume that we end up getting another high and we actually hit upwards of my 27K target. If that's the case, then nothing really changes. This would be the exact same scenario. The only difference is we'd be going up a little bit higher. We'd come back down, and then we'd be expecting still a correction back to this 618 target, but the correction itself would look a little bit different. I would personally be looking at it something like this. We get this top, correct back down. We might get a bigger bounce, but then overall I'm still expecting us to come back down to the 618. And so instead of going all the way to 19K, we'd be looking at around, just sub $20,000. And so it's all right there so close that I still think it shouldn't matter. Like I said to you guys, you're not going to nail the exact top. You're not going to nail the exact bottom. Chances are none of you ended up buying at these very lowest points after the FTX collapse. And nonetheless, it doesn't really matter that much because what we're looking to do is capture the bulk of the move. And if we even end up going up a little bit higher and then you take your profits, just understand that had you have sold right now or had you have waited till 27K, the difference of where you're going to be buying back in based around the 618 is literally within, an $800 to $1,000 range. That's not that much of a move, and you shouldn't really worry so much about that because our big focus should be once again on the big picture. Now, the other scenario is obviously where we overextend. Let's assume that we go even higher than my 27K target, and let's say that we run all the way upwards of 30K, maybe even upwards of about $31,500, somewhere inside of that range. So let's just draw $30,000, and let's talk about us actually overextending. Because here's the thing, guys, inside of a wave 5 impulse, they can get overextended. Sometimes they can be short-lived. A short-lived one would basically be where we top right here. Now, a normal impulse would be where we top to 27K, which is pretty much why I've made that my target. Because, I'm just looking for the average of the move. Even if it overextends, it doesn't really matter that much because I would have captured the bulk of that impulse considering I was accumulating down here, right? Well, let's assume that we actually end up going even higher. Now, if you guys remember, when we were back down in this period, I was talking about how I was initially watching for a target of $30,000, and I still think that that's a very real possibility. But when it comes to me, you got to understand that because I was accumulating down here, I targeted 27K because I didn't want to get too greedy and ahead of myself and think, well, we're going to go straight to 30,000, and then what happens if we don't hit 30,000 and we top a little bit earlier? And then I was just sitting there and missed out on being able to capture a lot of that profit. So for me, I was willing to stomach us extending higher than my initial target, me taking profits at around 27K, and then when that happens, either way, we're going to expect to see a correction, but I would be okay at taking profits at 27K, even if we extended higher. And so I felt like it was more risky for me to try and hold straight to $30,000 and then take profits all the way there, because that in and of itself would be a very extended wave 5, and I wouldn't want to bet on that exact form. And I wouldn't want to bet on that exact thesis so heavily. When I was accumulating down here, it makes much more logical sense to take profit at an average point inside of this wave 5, because even if it extends, I'm not missing out on that much, and my real focus is where the market is going to end up bottoming on the way down. So if we end up coming upwards of 30K, once again, we're targeting this 618 as a point to buy back in, but the thing is it changes just a little bit, right? Now, if we end up topping where we're at today, we're looking at about just over $19,000 as where the 618 would be. And if we draw a box, it's basically going to look something like this. It would basically be here. We have this entire range to be looking at accumulating, and it's all based on where we end up topping inside of this final impulse. If we end up topping at right here at the market, we'd be looking at an entry at about just over 19K. We're going to make this green. If we end up rallying upwards of 27K, then we'd be looking at a target of about 19,007 or 800, and that's based off of us topping at 27K. And if we end up rallying all the way upwards of 30K, we'd be looking for us to be re-entering right around $21,000. So there's really 3 different levels that I personally see fit. Nonetheless, all of these are going to be taking us from about $21,000 all the way to $19,000 with an average target of 20K. And that's really where I think that no matter where we end up topping inside of this move, that is where we're going to be headed. And once we do start correcting, if we run all the way up to 30K, this is going to be a major blow off top. We'd have an instant sell-off, probably come all the way back down to these range lows. It might not be straight up like that, but it'd probably be something like this. Might get a bounce. But then regardless, I would be expecting another deeper correction all the way back down to this 618. Whether we top here at 27K, it's all going to be roughly the same type of a move, right? Where we expect to see this rough ABC correction as we come back down in between, basically 21,000 to 19,000, and with an average entry of 20K. That's personally where I see fit, us finishing out this impulse and then us coming back down. And so that's really what I'm personally watching for. I think that that's what's going to end up happening. And if we come out here on the bigger time frames, I think it's important that we factor in some of this stuff, because at the end of the day, a lot of people are going to be really focused in on the shorter time frames, and I think that the best thing that we can do is, while we're focusing in on the shorter time frames like I've been talking about in most of my recent updates, we also factor in the bigger time frames as well. Because here's the thing, guys, what we're going to be doing is we're going to be consolidating and retesting this entire previous support range leading into the FTX collapse. And that's where we're going to be reaccumulating as we head into, the rest of this year. So no matter where we top, let's just assume 27K, we correct back down. We're going to be doing some type of move like this. It's going to be an ABC correction that we come back down all the way to basically retest our previous support levels, our previous resistance levels now acting as new support. And the big thing to understand here is this will be a period of reaccumulation before we start our next impulse back up. And so if you were accumulating all the way back down throughout this period, I think the biggest thing that we should remember here is not to worry too much about the shorter time frames. Yes, we are expecting some type of correction here, but whether you nail the exact top of that move or whether you don't, it really shouldn't matter that much. I think taking profits right here at this exact price, whether you take profits now or whether you take profits at 27 to 30K, either way, once the bearish correction sets itself in, you're going to have an opportunity of being able to get back into the market. And so I think that that's the big focus here. Now, regardless, if you're somebody that doesn't trust yourself on, selling right here or, a few $1,000s upwards, and you're much more focused on the big picture, understand that even if we see a top where we're at, and we start a deeper correction back down to reaccumulate off of prior resistance levels now as support, understand that the next move that's coming that will happen, later in this year, probably will begin that impulse at around, late spring to early summer, and we'll probably top at that impulse somewhere. It's hard to say, probably around the fall would be my guess, the fall to winter. And we would most likely be rallying upwards of about 40 to 50K. And I honestly think that we'd end up rallying all the way upwards of the top of our first lower high as we entered the bear market, which is going to be about just under $50,000. That's personally where I think that we would rally up once we finish this correction that we're expecting. I think that that's most likely where we're going to be rallying upwards of. later into the end of this year. And so with that being known, I think the big thing to remember here, guys, is not to get too worried about this shorter time frame, not to even get too worried about the correction that we would expect, because we know that even if you don't sell any profits now and you hold all the way throughout this bearish correction that we're expecting, the move that's going to be coming to the upside is still going to be so massive that you really won't care that much. The big thing here, guys, is if we focus on the big picture time frames, we know that there's still so much more upside potential to be done, because this is just the very beginning stages of the bear market. Now, the reason why I talk so much about the shorter time frames is because I like to give you guys an idea of either scenario, where after we reaccumulate, we're going to make a run upwards of this level, we'll correct back down, and then we'll do something like this, and we'll build some type of early trend line that'll be a lot more customary with how our prior cycles ended up playing out. That's what I personally believe is going to end up happening. And so during these periods, we're going to have an opportunity of getting in on the corrections and selling in at the highs when we start making them, and then jumping back in once again. Or if you're somebody that doesn't trust yourself, you're not trying to nail the exact high, or you're not trying to really trade yourself up, then you can just look to be holding and look to re-enter new cash that you have. Let's assume that you've got a job, you want to be re-entering the market, dollar cost averaging. You're still going to be able to do that in these corrections all the way through without ever taking any profits. Because here's the thing, for me, I like to buy at the range lows, and I like to hold the majority of the bull cycle. The market really starts to skyrocket into price discovery. That's where the majority of our money is made, and that happens at the tail end of the bull cycle, right? And so you don't really want to worry too much about all of these short-term highs that you could be nailing as we're, just consolidating and accumulating. Because here's the thing, I remember there was a ton of people that during this move right here, they took a ton of profits, and then they were expecting this to just keep dropping like we had just been throughout this entire period. And then what ended up happening was the market took off without them, didn't provide hardly any pullbacks to get in, and then they got left behind. I don't like the idea of me missing out on that move, because I know that 2 to 3 years from now, when we're experiencing this type of a liftoff, all of the profit that I accumulated down here, even if I had to hold on to a short-term loss, it did not matter, because in the big picture, we're going to go up so much higher. It's still going to be viewed as a good buy opportunity when we're looking at Bitcoin rallying upwards of $150 to maybe even $250,000 heading into this next bull cycle. And that's the things I want you guys to be very aware of. As somebody who's been through, this is my 7th year, this is my going into my 3rd bull market. I've learned a lot of things over the years, and I'm trying to help you guys as much as I can by learning from my personal mistakes. I didn't take as many profits throughout this period of time as I could have, because I was so focused in on us to have a blow off top. I ignored some of my prior analysis, and because of that, I was caught off guard. Now, with that being said, as we're in this low point of the cycle, don't worry so much about the short-term price action. If you're somebody that doesn't want to try and trade your way up, you're somebody that doesn't want to risk that, a lot of people are going to cost themselves a lot of profit by trying to be a swing trader when they aren't actually cut out to be so. And so if that's the case, remember that 2 to 3 years from now, when the market is into price discovery, had you have bought the exact top right in here, or it bought really at any point throughout this period as we've rallied upwards of 40K again, that's going to be looked at as a good buying opportunity in the big picture. In the same way, throughout this entire period, a lot of people didn't buy all the way down in here, and most people were accumulating on the way up and on the way throughout this entire period. And so, you weren't buying the exact bottom in this period, but everybody that bought down in here around $10,000 to $12,000 was very happy that they did so once the real euphoria set into the market. And I can just about guarantee that it's going to be the exact same way right now. So keep this in mind as you're getting ready for this next cycle. Keep in mind that you should always focus on the big picture. You shouldn't get too focused in on the shorter time frames and the swings up and down, because there's going to be many 30% drops. There's going to be many higher highs and higher lows as we go over this cycle, and it's going to be a bumpy ride. So if you focus on the big picture, ignore all the short time frames. If you're somebody that really feels the need to compound gains, look to do so, but don't try and nail the exact top of this move. Otherwise, you're going to end up not taking any profits at all. So thank you guys so much for tuning in. If you found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these videos. If you guys want to join the Discord server, follow all the signals over this course of the next cycle. We've had a lot of new people joining, and I've been very adamant about explaining that now is the opportunity to be getting in, because now you're going to be seeing where I'm actually positioning my money, which altcoins I'm buying at the low point of this cycle, preparing for that next major bull run, because the majority of our profit is made by buying buying at the low points of this cycle. And when we're buying at the low points of the cycle and holding for the next 2 to 3 years, there's a ton of profit to be made. If you're looking for a 20, 50, and 100x opportunity, maybe even more than that, it's way easier to be doing that inside of the low point of the cycle than it is to wait for this type of a move here. Although it happens many times at the top of the cycle, that's where the most risk is. And so if you're somebody that wants to know what I'm doing over the course of the next 3 years of our bull trend, now is the opportunity of getting in. Links are in the description. It's a lifetime membership. As long as I'm doing crypto, which I plan to do for a long time, you're going to know exactly how I'm positioning myself over the course of this next bull run and the many more bull runs to follow. Thank you guys so much for tuning in. And with that being said, I will catch you in the next one. As always, peace out.